All right, ladies and gentlemen, it is time for the end of day post-wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post-wave price trigger reports. All right, so as you know, we are living in very uncertain economic times. Everything is pretty much changes minute by minute, second by second, day by day. And there's a lot of information out there. Some economists are calling for a recession in 2023. Some economists say there is no recession and we will not be entering a recession in 2023. And yet, still, other economists say we have been in an economic depression since 2008. So, depending on which way you go or lean in that discussion, will pretty much determine a lot. But we don't go by what you think. We don't do that. No, we go by what saith the algo charts, because that's how we make our determinations on what we're going to do. Now, mind you, my algo charts are unlike any charts you've ever seen because I'm using proprietary information. I'm taking a snapshot of the actual system and I am giving it to you on these live streams. What you're seeing in these charts is not the actual system. It is outputs from the system plotted in a chart format so that you can follow along with what I am seeing. And that way you can do what I do. You can do exactly as I'm doing with these. Now, the reports that we put out at pulsewavetrading.com, those reports are much more detailed and a lot more specific. And it not only tells you what type of market it is that you're looking to trade, it analyzes it for you and tells you if it's a bull market or if it's a bear market, or is it a consolidated sideways non-trending market. It gives you all that good stuff. And then it doesn't stop there. It reads the market for you and tells you what type of trend you're in and what stage of the trend you're in. But it doesn't stop there either. It then tells you what to do about said specific market that you're looking to trade and operate in. Gives you very specific entries and where to set your stops, all that good stuff. And we even came up with the POP method to teach you how to manage your open positions. So it's a wonderful tool that we offer to you. And with that being said, we'll look at our first chart this evening, and that is of the Dow Jones by way of ticker DIA. And if you take a look at this one, you will see that we came into today under the auspices of the crash alerts, the back-to-back crash alerts, and we got nice downside production as this market is on its way to the top of the Kumo cloud around the $315 price. So that's what we're looking to get out of this, as the bears are very much in control of this market. Taking a look at the gold market. This is ticker GLD. We just finished covering DIA for the Dow. You'll notice that this one is under the auspices of the crash alert as well. And we did get downside production, and I'm expecting more to come. The top of the Kumo cloud here will have prices dropping below $160 a share. It is to be noted that this market was in a bear market rally that has since topped out. So we have a short-term top now in place in gold. I know people think that it's going to explode higher, and it could. But remember, these are markets. And markets are controlled by market forces. Therefore, the ebb and flow of buyers and sellers duking it out, at some point, someone has to win. And when those situations arise, that is when you, as the trader, is able to capitalize. All right. And in this situation, the rally mode has come to a halt, and the market is now trying to stage a correction. All right. So become 1 second to midnight to turning into full blown correction mode. And we'll see where this market goes from there. But for now, it is a bear market and you're looking for selling opportunities. The next chart we're looking at is the Russell by way of ticker IWM. This market has come out of a neutral phase and is now into the bearish phase. As you can see here, the bears are in control of the market. You can see here also the crash alerts and now the downside production that we're getting. Bottom of the Kumo cloud at $175 a share is the immediate initial target, followed by the 52-week low. Next up is oil by way of ticker OIH. And you will notice here that this market is in a correction mode as well, and the bears are in control. Target is around the $270 price range, which will correspond with the top of the Kumo cloud here. It is in a bull market, so this is a bull market correction. And once it has bottomed out, we'll see if the market will relock in on the bull side and start another rally. But for now, we got a crash alert for tomorrow's trading in the oil. All right, next up, we have the NASDAQ 100 by way of QQQ. And as you can see here, this market gave you downside production today from the crash alerts. Bottom of the Kumo cloud south of 275 is the initial downside target, followed by the 52-week low. All right. And this gap here from November the 10th is also in play. Next up is silver by way of ticker SLV. We looked at gold by way of ticker GLD just a moment ago. You can see here this one had a crash alert coming into today, and you got a little bit of downside production. The bears have taken over the market as the bear market rally has seemed to have fizzled out. The top of the Kumo cloud around the $18 a share is the initial downside target. Next up is the S&P 500 by way of ticker SPY, and we had the crash alerts from the other day, and you can see how the market came down and gave you downside production, and we're getting close to the $390 target, which corresponds to the top of the Kumo cloud. Secondary target will be around the 375 level, which is the bottom of the Kumo cloud, followed by the tertiary target of the 52-week low. All right, next up is bonds by way of ticker TLT. Had a crash alert coming into today, but the market has not yet given any downside production and instead has now posted a new weekly high. Is this going to set up for the leg down? We shall see. But we do have a consolidation indicator going off now, sounding the alarm that we may not get very much downside production as long as the neutrality signal is activated. Normally, this means that you can expect sideways movement for an extended period of time. Next up is the US dollar index by way of ticker UUP. So looking here, you can see that the bears are very much in control of the market as the US dollar index topped out back here on the week of September the 27th and has been in a corrective state since then. So this is a bull market correction, and the market has been accelerating to the downside, increasing downside momentum, and that has not changed. All right, we're still calling for more downside. This market is in a free fall state and doesn't have very much support at all. So as far as a downside target, support is all the way down here around the $25 price. So you still got another $3+ to fall potentially in UUP. Now I know what you're thinking. You're probably thinking, how does this correspond to the actual cash index itself, which is a good question. Let me show you. Looking at the dollar index, cash index itself, you can see this 105 handle is holding for now, but the ultimate target is down here around a 93 handle. That's right, ladies and gentlemen. Right now, the dollar is in jeopardy of falling back down below par, which is 100. And that would take prices down to around the 93 threshold, between 93 and 91-ish. So that's quite the drop from here, but heads up, it's looking like it could actually go that way. Now, if the bulls want to come in here and start trying to pick bottoms, thinking that they've called the bottom, they can be right. Go ahead and be my guest. But the bears are still in control of this market. Any type of a semblance of a rally is going to be sold. Just remember that. Any rally, any intraday rally, the bears are going to use that as a catalyst to get short. All right, because when you are in a correction like this, you're under the bearish downtrend channel influence. That means you're looking to sell rallies. You're looking to find shorting opportunities. You're not looking to get long. There's nothing bullish on the chart at this point. All right, so too early to call a bottom in the US dollar when we now have the 93 handle in play. So just FYI, ladies and gentlemen. All right, I do see we'll take this one request and then we'll call it a night. All right, so the ticker here is TCDA. All right, this is Tracida, I think is how you say it. Let's see, give me just a second. I'll see what I can do for you. Hopefully we can get this data up and running for you. All right. Okay. This looks like it's traded on the NASDAQ. All right, so on this particular ticker, TCDA, traded on the NASDAQ. Ah, wow. This is crazy. Okay, so interesting. You had several warnings before this event happened. The first crash alert was on October the 13th, and that was after a flip-floppage rally alert from October the 11th. Then you got another notification on the 14th. So on the 13th and 14th of October, you got crash alerts. And you got a little bit of initial downside production. Then you got a nice one here and here. Then the market rallied on the 20th of October. And then on the 21st of October, you got another crash alert. The market closed at $10.88. The next trading day came on October the 24th. All right. And the market opened at 71 cents. Ouch. I don't know what kind of catastrophic event happened, but for people who went to bed that evening on October 21st, knowing that the stock closed at $10.88, had no idea that the market was going to gap down and open at 71 cents. Since then, the market has proceeded to fall lower and lower, hitting 52-week lows back to back to back to back for several weeks. And now we've closed at 21 cents after getting yet another crash alert. It's received a series of crash alerts since then, bringing it to where it is today. I don't know what's going on with this particular security, but it looks to be dead in the water. Unless you're long from these pennies, these penny ranges, I don't know what to tell you, but if you're long from up here, wow. There's nothing you could have done. Even if you had a sensible stop and for the market to gap down at 71 cents, you would have been triggered immediately, and you would have, that's a whopper of a loss, and there's nothing you can do about it. That's why this is something here. I typically myself, I try not to trade a lot of different equities. I like to stick with those equities that have, the well-known names, those that have really decent volumes. Like, you can trade. Like, I like the stock indices. The S&P, the Nasdaq, the Dow, the Russell, because I'm guaranteed to get fills if I need to get out of Dodge, and they don't have these kind of breaks. This gap break is absolutely insane. Now, obviously, the market should come back and fill the gap, but it may not. I don't know what's going on with this security. It could go to zero at this rate. I don't know what's going on. But these kind of breaks, they can happen. They can really happen. It has to be a situation where, obviously someone knew something, but then there were people who didn't know anything. If you go back and pull up weekly on this particular stock, all right, this one doesn't look like it's been around that long because it's not meeting all my criteria, but it's looking like at the highest. Well, let me go back to the monthly, see if I can get something on that way. Okay, so this stock at one point was in the $40 range, and now you're down here to pennies. There's an old saying that if you see a cheap stock, it's priced that way for a reason. So, yeah, I don't know what the story is here, but since its inception, it hasn't done a whole lot of nothing but drop. This is a dangerous stock, man. Dangerous stock. Wow. All right. So, yeah, I wouldn't touch this one with a 10-foot pole. Yeah, this one looks crazy to me. It looks absolutely crazy. See, so it came in the month of June of 2018. Looks like it opened at $25. Had a nice little rally, but couldn't hold it, and then just dropped. The month of December of 2019, that's when the wheels came off, and this thing just proceeded to fall. Yeah, I wouldn't be trying to operate in this one. Now, if you're already long, I don't know what to tell you, but I wouldn't be trying to do nothing with this one. Yeah, man. All right, so that's it, man. All I can say is the reports are out, so refresh your browsers. I know sometimes they'll go and they'll pull it up, and they may have old data because you have to refresh your browser. Because sometimes I'll go in and I'll do another update run. So it's always a good idea right before you place your trades, refresh your browser just one more time, because it's possible you could have missed an update, or maybe you pulled it up right before I posted the new report. So always, FYI, refresh your browser before you place your trades. That way you're getting the correct data. All right, smash that like button, and you know what it is. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.